But we want to bring in some guests here. We have, and I'm glad you brought up gold, David, but Peter Schiff and Joran Brook. Joran is with the Ayn Rand Institute. Peter is with Euro Pacific Capital. And Peter, what do you make of this move? I know you're probably not surprised, but you are, I bet, dismayed.
It's an absolute disgrace. Ben Bernanke is leading us down the path to financial ruin. This is not just the inflation genie being let out of the bottle. This is the blue gin. You know, he's going to turn the dollar into monopoly money. They need to be raising interest rates, not because the economy is in good shape. It's in lousy shape. We're going to go through a recession. In fact, we're in it right now. The GDP numbers that came out for the fourth quarter showed 0.6% growth, but they assumed inflation was only 2.6% for all of 2007. That is absurd. Inflation is at least 3 times that high. And, yesterday one of the panelists said, but we have to accept the government numbers. I'm not going to close my eyes and remain blind to what's obvious. I'm not going to listen to the government. And they are ruining this economy. They are ruining our currency. They need to let this recession run its course.
Well, you're on, not according to Wall Street right now. We got green numbers on the Dow, on the NASDAQ, S&P, Russell 2000. It's all green right now. Are they blind?
Well, I think they are blind. They're blind to the long term. I think short term, this is going to encourage some people. Short term, look, this is a bailout. This is a bailout of the banks. This is a bailout of homeowners. I'm going to go refinance my mortgage, with rates this low. This is a way to get us to borrow money. But the long-term solution for the U.S. economy is not to get us to borrow and spend more money. That will bring about more inflation. I think the stagflation word we should start thinking about, because I think it could be a reality. We could see real economic slowdown and the inflation numbers pick up. So they're real. This places the U.S. economy at more risk, not less risk.
Let me also point out, David, these green arrows are meaningless. Look at the dollar. Look what's happening to gold. Look what's happening to euro. All these arrows should be red. Our assets are losing value in every currency. They're losing value against gold. It's only against the dollar, which Ben Bernanke is debasing. Alan Greenspan was the worst Fed chairman we ever had, and now it looks like Ben Bernanke is going to try to steal his crown.
That's a guy I want to go partying with.
What about that point that Peter makes about the dollar? Do average Americans feel it? Are they aware of that?
Worrying about the dollar going down is like worrying at a frat party you had too much when the keg is empty. Look, we did once tighten in the midst of a recession to defend the dollar. That was in 1932, and it deepened the Great Depression. There were a lot of other things that went into the Great Depression, but that was another factor. We have made a decision as a nation, for better or worse, that defending the currency takes a backseat to financial stability.
Well, I'm glad I own a bunch of gold.
Well, and that's how we got the 70s. That's how we got stagflation in the 70s.
Speaking of the dollar, hold on. Speaking of the dollar, Treasury Secretary Henry Paulson is about to speak in Washington, D.C. We do have a camera there, and the minute he begins to speak, we will take that live. He is expecting to make some comments about what has happened. And, David, I don't know if you noticed this, but we should bring Neil in on this. You talked about mortgages and rates. Within minutes of the Fed's decision, Bank of America announced that they are lowering their prime lending rate to 6%.
They were first last time, too.
What is somebody standing there with a button?
Well, someone will say, cut to right, cut to right, cut to right. But it's interesting, guys. I mean, you can lower the rates, as Raul pointed out, and I think you're right. Your preference should be not so much the dollar right now is the immediate fire. If you buy the argument the economy is the fire, it's debatable. But I think, even if you get people with the wherewithal to refinance, and as you guys have been reporting, we are seeing a refinancing wave, the big trouble seems to be in communities across the country is getting the appraisal you want so that you can refinance that vehicle, and then getting to lenders who are reluctant to give you that deal, because no matter how low rates go, they're being tougher than a son of a gun to give you the loan. So lowering rates certainly helps, but it doesn't make them any less stingy.
Randall, Ronald Reagan used to say, I like a strong dollar. He said, I don't know exactly why, but it sounds good to me to have a strong dollar. And he had a strong dollar policy, but he also brought down inflation. You can have both. We always focus on what the Fed does about the dollar, but doesn't the Treasury, and we're about to hear from Hank Paulson talk about this, can't they do something on their own to strengthen the dollar?
They have to stand up and say for sure that we want a strong dollar. This has been an empty rhetoric for years now. They are very much acquiescing to a lower dollar, because I don't see that there is any other other way out.
They're acquiescing
But
because
what does it
a
make
weaker
what they
dollar
say?
helps.
They
our
can't do
I don't know
anything.
if it helps. I don't know, but what you can do to avoid it. That's
Peter?
What difference does it make what the Treasury says? You know, it's like a kid going to school and telling his teacher he has a straight A policy.
Here's why, Peter, because Liz and Dave are going to go.
Yeah,
to the
no, it's like a kid tells his teacher he has a straight A policy, but he skips class and he doesn't study. He's not going to get A's just by saying he has a policy.
Tell me about it. That was my life.
The Treasury could say they got a strong dollar policy all they want, but if we got Ben Bernanke debasing the money, it's going to go down, and it's going to go a lot lower.
You're on, Paul O'Neill said just a couple of months ago, he said, everybody wants to do a strong dollar, etc., but if you jump in and try and do anything, like to prop up the dollar, intervention, which we've seen across the board globally in years past, then isn't that a little bit artificial?
But we can't intervene. We don't even have any
because we're printing money, we're lowering interest rates. This is all artificial. The only way to prop up the dollar is to reduce the money supply. It's to buy back dollars, and they're not willing to do that. They're doing the exact opposite. They're printing more dollars. They're circulating more credit into the markets, which debases the country. Look, this system is all messed up. The monetary system in the United States it's inevitable that we'll have bubbles, we'll have recessions. These cycles are inevitable given the kind of monetary system, this paper money that we have. What we should be really talking about is a gold standard. We really should be talking about topics that Peter and I have talked about in the past. The Fed, by its very nature, can only mess things up. It can mess them up more. It can mess them up less. I think they're doing a better job of messing
we
things
don't
up right
have
now.
Euron running for president. We don't have Peter Schiff running for president. Ron Paul doesn't sound like he's going to win the presidency. So short of that, what are we going to do?
I think when all is said and done, guys, and I could be wrong on it, it's about housing, stupid. It's about homes, stupid. It's about your mortgage and whether you can afford it. It's about your home equity loan and whether you can carry it. And all the other stuff, I think, Randall, maybe you could... the other stuff is noise.
No, I think that's right.
Yeah, but Neil, home prices are going a lot lower.
This is a housing
the Fed can't
bailout.
stop that. They're going to go a lot lower.
Well, maybe, but I'm saying that's what this is really about, Peter. I think in the end, your comments notwithstanding, I think that's what this is about. Just try to get a floor going.
And what's more, in Japan, you had a real estate deflation through the 90s. The yen peaked and then also declined. Who is going to want to invest in a country where there is a credit deflation, asset deflation, and we're dependent on foreign investors coming to buy our assets?
Again, we're waiting for Henry Paulson, the Treasury Secretary. He's supposed to speak at the Real Estate Roundtable of State of the Industry meeting. The state of the industry isn't so great. We know that. But as we wait for this, Peter, give us a comment on what you were just about to say regarding that.
The only way the Fed can stop real estate prices from falling is by engineering every other price to go up. So they can keep our homes at these artificial levels as long as food prices and energy prices and clothing and furniture, if they can get all those other prices to rise, if they can create so much inflation, then they can keep nominal home prices floating. But that's not going to do us any good. That's going to wipe out the middle class. That's going to wipe out the savers. It's going to wipe out people on fixed incomes. And yeah, I'm not running for president. Euron's not running for president. But Ron Paul is. And he's the only person that understands this. He's the only person that's talking about putting us back on sound money.
And if it's not obvious enough already, Peter Schiff supports Ron Paul for president. But we are in a political year. He's absolutely correct. And in political years, we get short-term solutions, don't we?
Don't you guys find it odd that we're pushing for bigger government, and that's the trend with the stimulus package and all, and smaller rates, if you will. You know what I mean? So a more generous monetary policy and a bigger government one. And I don't know what longer term that means outside of saying that we're trusting the government to be big and to help us. Well, and we're hoping in the meantime that the Fed will kind of goose that.
But Randall, housing, meaning bring out the housing picture from the GDP, and the third quarter of 2007 did not look nearly as bad. Fourth didn't look that horrible. We've just gotten the number today that shows a market slowdown, but still, with that one part of housing eliminated.
But I'm saying that credit is contracting throughout the system, and you're cutting off, you're still standing on the windpipe for the economy to breathe. And credit is being destroyed as fast as the Fed is creating it. That's what needs to be done to prevent an asset deflation. Nobody's going to go out and buy cars if their house is foreclosed
But
upon.
also, you know what's going to happen with this new credit? It's not going to go into the U.S. economy. Personally, I'm going to borrow some more money on my margin account and buy more gold stocks. I mean, people are going to take this cheap money and bring it out of the United States. They're going to buy foreign assets. They're going to buy commodities. They're not going to want to sink it back into this bottomless pit.
Well, a lot of people are going to want to readjust their rates on their home mortgage.
Sure.
Yeah, but who's going to want to take the other side of that trade? Who's going to want to be a lender?
Guys, if we can hold on a
Nobody.
second. Henry Paulson, the Treasury Secretary, is about to speak. By the way, Peter Schiff is still standing by. Peter, are we eventually going to see another Federal Reserve chairman somewhere down the line who's going to have to squeeze the inflation out of this economy in a much more severe way?
And then we will get our economy.
Unfortunately, we're digging ourselves into such a great hole. It's going to be much more difficult. You know, if we get a Paul Volcker again, it's going to be a much more daunting task. And of course, you know,
we have
Paul
to
Volcker
interrupt,
had to
Peter.
bring in.
Sorry, we have to interrupt. Here is the President of the United States in Torrance, California.
I want to get back to Bill Gross if we can, because he really does have some skin in this game. How is this cut going to affect the bond market, Bill?
What it's doing at the moment, what I think it'll continue to do, is to what we call steepen the yield curve. It will drop short rates. The Fed has done that today, and they'll probably drop them more. And long rates and intermediate rates actually have gone up, reflecting the inflationary potential. There's no doubt, with inflation between 2 and 3% on official levels, that inflation is not as low as what it was in 2003 when the Fed brought interest rates down to 1%. So I think the Fed has to watch it, and the market is beginning to anticipate some inflationary potential here from what they're doing.
Yeah, inflationary potential, especially when you look at the dollar, and the dollar is now, I guess the euro is hitting an all-time, well, not an all-time high, I think very much close to an all-time high against the U.S. dollar. Are you worried about the weakness of the dollar?
I think that's a problem, Liz. It's not one that the Fed puts as job one in terms of their priorities, but it's certainly a problem from the standpoint of inflation. I mean, the dollar is depreciating against the Chinese yuan, by an 8 to 10 to 12% annualized rate, which means higher prices at Walmart ultimately. It's also depreciating against other G7 currencies at a milder rate, but nonetheless it ultimately means that import prices go up and inflation stays high.
Bill, do we get to stagflation, or is that an outrageous concept?
Well, hopefully we get to stagflation in terms of a growth rate that renormalizes, I guess, and inflation that perhaps stays in the 2 to 3% zone. I think, Liz, ultimately, and I'm talking 2, 3, 4 years down the road, what the Fed needs to do and what the U.S. government needs to do is to re-stimulate the economy and to reflate the economy. That simply means that not only will growth be a little bit higher than it is now, but inflation will as well. We have $40 to $50 trillion of liabilities way out there in the future, and so inflation is going to be with us now for some time to come.
Now, Bill, companies have to buy things in order to produce what they produce, and Congress is trying to make it easier for them to do that by accelerating depreciation, and perhaps the rates coming down will help them to do that. Isn't that alone positive from this rate cut?
Oh, I think it is, because they'll be able to borrow at cheaper rates and to, to place that investment, I guess, out into the hinterlands at attractive rates of returns on equity. So yeah, that's a positive. I think also that the fiscal package, which puts money back in the hands of consumers and importantly begins to address the housing market. I mean, it's the housing market which is the critical link to prosperity here. To the extent that we can, put more money in the hands of the FHA and the agencies in terms of lending power, then homeowners are going to benefit, and I think that's a critical link. I think Secretary Paulson has to address that going forward.
Bill, what are you buying right now? Where are you placing your bets?
We're sticking with high quality, but we're finding lots of opportunities in bank capital. I mean, banks are the ones that require capital. They've taken some hits here in terms of their subprime lending losses, and so, we're putting $2, $3, $4 billion a week, to work in terms of the bank capital market. I'm talking Bank of America, I'm talking Wells, I'm talking Wachovia, the big banks, the almost too big to fail banks, and they come at 2% or 200 basis points more than treasuries, just to put it in simple English, 5.5%.
Let me ask you, and I don't know if this is in or out of your bailiwick, but do you think that Bank of America purchasing Countrywide will end up being a stroke of genius or a big mistake for them?
Well, I think a stroke of genius, not that first purchase just below 20, but certainly the one around $6 or $7 on the share. What they're really doing, yes, they've got a pig in a poke in terms of the subprime portfolio, but they're acquiring a huge, in the trillions of servicing portfolio, which is a long-term income generator. And so once they get past the subprimes, they've got a servicing portfolio bar none in the world.
All right, Bill Gross, Managing Director of PIMCO, the world's biggest bond fund. Great to see you, Bill.
Thank you.
Thanks a lot for coming in.
Thank you.
So, Richard, there you have the bond market's approval, or somewhat.
Well, it's always pleasant to have Bill's support on housing-related issues. So
pleasant is an understatement.
But were you surprised that he seems to be favorable
not really,
towards
because he
this?
fully recognizes, as most of us do, that housing is a critical component of the U.S. economy. It's 20% of the GDP. So we need to get this fixed first, and I think we're on the path of doing that.
Peter Schiff, I know that you saw David Darst hold up that dollar bill with the 25-cent piece written all over it. He's smiling now.
Yeah, it's going to turn into a nickel pretty soon. And then, but I don't know why Bill Gross is so sanguine. I'm looking at a chart right now, intraday. The bond market is getting crushed.
Yeah, it's selling off.
And if you look at this chart, I think it could fall much further. We could see a huge spike up in long-term interest rates here. Mortgage rates could end up going up because of what the Fed did, not down.
10-year yields are at 3.6%. So
look
they're
at the
popping
intraday
up.
chart.
10-year yields are near, multi-year lows. If you're getting all crazy and worked up, a 2-year note is at 2.2%. You're getting all crazy and worked up about a 15, 20 basis point
You're
move higher
trader.
in the notes.
Look at the chart. I'm telling you, look at that.
Peter,
look at what's happening right now.
The charts
Look
in
at that
2000 told me that internet stocks were a great bet. Was that what we should have been following in 2000?
I didn't tell you that. You know that.
You said sell in 2002. That's what you said.
Is there some validity in what Peter says, where what the Fed does can invert mortgage rates and make them go higher?
Well, the Fed fund rate's not going to run in lockstep with the mortgage rates. They're tied to the secondary markets, and everyone knows that. But they will, over time, adjust downward, and they have historically, and they will in this case as well.
David, are you surprised that while the bond market's being hit, we had Bill Gross saying maybe it's not such a bad thing?
I'm not surprised. You basically got two bubbles bursting, David, as you know. 81 was the less developed country lending bubble bursting.
Did you turn that off?
91 was the junk bond market and savings and loan crisis bubble bursting. 2001 was the tech stock internet mania bursting. This one is a twin bubble, like Japan, and Bernanke knows this as well as anyone. He's got to deal with this credit bubble bursting and the housing bubble bursting. Sure. The image for this show is a sailor in the middle of a Pacific Ocean on a raft dying of thirst. The world is awash with money. It's funny. Both people are right. Peter's right. Everybody's right. But the world lacks credit.
Water everywhere,
lacks
not a
credit.
drop
The
to
Fed's
drink.
got to cut rates to get credit
Jordan,
moving.
do you agree with that?
No, I don't. I mean, the problem is the world is awash with money. It's awash with cheap dollars, and cutting rates is going to make the world more awash with credit and money. And as a consequence, I think the yield curve is going to steepen. It could steepen dramatically. It's partially what they want, because that's how they're going to bail out the banks. We have to go through a cleansing period after these bubbles. Otherwise, all you're doing is creating the next one. Some banks need to fail. People need to lose their homes. You need to cleanse the system from the bad
Peter, you got
decisions
15 seconds. Go ahead. 15 seconds, Peter.
Well, this is a disaster. Unfortunately, the Fed's making me a very wealthy man. I'm looking at my gold stocks. I'm looking at my foreign currencies. They're going through the roof.
But
the average
Dow,
American
Peter.
who hasn't been following my advice is in serious trouble. This is a disaster. We should be calling a spade here. The Fed, the government, they're not doing us any favors by printing money and dropping it from helicopters.
He did it in 15 seconds. We got plenty more reaction ahead to the Fed move.
And we speak.
Thanks very much. Well, a lot of people could be surprised to hear that illegal immigrants would be getting stimulus checks. Could that kill the bill in the Senate?
Back with us now to talk about it is our Fox panel, including Alex Markles from the U.S. News and World Report magazine. Alex, I'll begin with you. It's funny, there are some shades of gray when it comes to the whole concept that illegal immigrants are going to be getting stimulus checks. Maybe you can talk a little bit about that and what you think.
Well, let me just start by saying that in my opinion, this stimulus package is just a fig leaf for the president and for Congress in an election season. But let's be specific about where this, how many people are likely to get these checks, okay? There's about 1.4 million people who have these tax IDs. They are not only illegals, they are foreign non-residents who are working in this country and are paying taxes in this country. And about half of those, about 700,000, are illegals who may or may not end up sending that money home. So as far as I'm concerned, I mean, look, Tom Tancredo can scream and yell about this all he wants, but this is not going to stop the stimulus package because Congress and the president need cover in an election year.
Yeah, but Mike, just the idea with all of the fighting over illegal immigrants in this country, this could really jam up the works. I mean, the fact that you're giving money or is incentivizing illegal immigrants for being here.
I think first, I hope it doesn't stop the package from being passed. I think we need it, and you're dealing with two separate issues here. You're dealing with illegal immigration. You're dealing with people who are here illegally who work and pay taxes. So there are American citizens who don't pay taxes who are going to get checks as well as part of this, perhaps. So, you know, it's a difficult issue. I mean, if they pay taxes, it seems like they're due a rebate.
David Darst, they do pay taxes if they have that tax ID number, and so therefore... But you get some elderly people who are retired who maybe don't have any income, they're not paying taxes, and they might not get some checks. It depends on which sort of bill is passed, and that gets people upset.
I'm with Mike on this. I think you need to stabilize the economy. I don't think General Petraeus, when he was at Fort Campbell, Kentucky, was shot accidentally by an American soldier through the heart. He went to Nashville, Tennessee, my hometown. They asked him, we need to stabilize you first, then we'll operate. The surgeon, by the way, was Frist.
Bill Frist.
Okay? Bill Frist. He says, we need to stabilize you before we operate. He said, forget that. Operate now. Okay, and that's what we need to do with this package. I'm not saying it's not important. You're conflating two issues. I think immigration is a positive thing for the United States of America.
He's got great analogies.
Well, here's one for you. I was holding this one back here on the air. It's like two kids fighting over a Heath bar. It's like two kids fighting over a Heath bar while the house burns down. Okay.
Yeah, but Peter, the thing about the illegal immigrant issue here is that it just shows what happens when you pass a bill onto another body like the Senate. They're going to load it with all kinds of controversial things. Will that stop it from happening?
Well, unfortunately, probably not. I wish it would. You know, talk about going from the sublime to ridiculous. I mean, this whole thing is ridiculous from the start. We shouldn't be giving these rebates to anybody. Now, sure, you know, you can't stabilize the economy with inflation. I would love to have some tax cuts, some legitimate tax cuts that are paid for by big cuts in government spending. But just printing money and doling it out is not the answer. That's more of the problem. I don't know how many times I got to say this.
You're on if the illegals who are paying taxes, and that's what it appears would be under this bill here, do get a stimulus check, or at least the prospect of it, would that derail it, at least in the Senate?
Well, I don't think it will. I think everybody's right. The politicians need this. I wish it would derail it. I think this stimulus package is ridiculous. It's going to do more damage than good. If they really cared about stimulating the economy, they cut the marginal tax rate on the rich, because that stimulates the economy more than anything else. If they really cared, that they would cut government spending. Cutting government spending is what will get this economy going. Cutting government regulation is what get the economy going. None of this Keynesian nonsense that is proved time and time again that it doesn't work. It only creates more problems.
It worked in the 1930s. By the way, the government spending...
It did not work in the 1930s. In the 1930s, the Depression got worse.
It worked.
Year in, year out. Go look at the numbers. Unemployment got worse every single year.
2008, let's at least stay in the same year that we're in.
It didn't make it any better.
He made me forget what I was going to say.
You know, everybody has an advantage today because Mike has a sore throat. Okay?
I can't
Let me
see
just
it.
be clear
It's
about
about
one
time.
thing, okay?
Well, I think we've got
We're talking
David's
about
voice is fine. Go ahead,
$4.3
David.
billion.
Hold on a second,
You've got
David.
to
Go ahead.
watch right now jobs, credit, and earnings. Now, we got this bill passing through, and we hope it will make it. Jobs, credit, and earnings. This is the emergency room of the hospital. I don't know that people realize the degree of severity and the critical nature of the economy here.
Oh,
And
I
that's
realize
why
it.
it needs to
But
be,
you're not
it
gonna
needs
save
to be
the economy by
stabilized. You're
sending
like
people-
lecturing to someone on the gurney in the near the operating room. Why don't you lose some weight? Yes, these guys are saying that
No,
we
it's
need
got
to
nothing to
shape
do
up
with
and have a
weight.
clean lifestyle.
Okay,
But
hold
you
on, we
need
gotta
to
stop.
focus.
We're
We'll
gonna
get back to the debate. We've got to take a short break. We'll be right back.
Stay tuned.
Well, first markets went up, and they went up to triple digits. Now they are down in negative territory. But again, who knows? This market's been all over the place since we had the announcement of the Fed's cut. They cut both the Fed's fund rate and the discount rate a full 0.5 percentage point, even though some people were betting on a quarter.
So what happened? We were at more than 100 points here. Like 120 or something. Let's bring in our panel once again. David Darst of Morgan Stanley.
Liz, I think it's profit-taking. I think the market has rallied off its lows. I think people are looking for these other key variables. Now we turn to jobs. Now, based on the first quarter GDP numbers, which came in 0.6%, the street was looking for 1%. There's some things in there. The ADP payroll numbers today indicate to us that the job growth might be 100,000 on Friday. Our earlier estimate was 75,000. As you know, last month was 18,000. This is the key thing that we think will determine the severity and duration of the recession.
So,
How many jobs?
Alex, if folks still have jobs, presumably they can still go out and buy things, and consumer spending won't be hurt too much. Perhaps this recession may not happen.
Oh.
Well, at least you'll have $300 to go out and buy an Xbox or something. But let me just remind you a little something, David. A week ago, I was on with a bunch of folks who were absolutely dour about the prospects for the market. It was a day that Citibank had come up with terrible earnings, and I said, this is your opportunity to buy the banks at a discount. The banks are now up anywhere in the 10% range, and today's cut is going to make a difference because it is going to steepen the yield curve, which is going to put money in the bank's pockets.
I don't know.
And is going to keep those banks
Alex,
from
I'd love
getting
to
in trouble.
believe that, but if the bond insurers lose their ratings and get in a lot of trouble,
That's
you
key.
may look at $70 billion more in new write-downs for some of these banks. And Peter, can't imagine that can be healthy for the banks.
No, don't buy the banks. But you know what, Liz? If you're a saver, if you got money in the bank, you got CDs, you got government bonds, you better run for cover, and you better run quick. Ben Bernanke is gunning for you. You better pick up the phone and buy as much gold as you can afford. It's going a lot higher. I'm looking at the chart of oil right now. It's going to blow through $100 a barrel, and it's not going to stop.
This is what
Prices are going through the roof.
This is what David Darst brought today. I mean, it's a shocking thing. He says the dollar worth about 25 cents
To the foreigners.
It's actually worth a nickel, and
foreigners.
it's going to be a penny soon.
And by the way, Alex,
We're going to have to
Alex,
replace pennies with dollar bills.
Hey guys, let me just pine in on one thing. I just came back. I'm out in Colorado. I just came back from Vail. Vail is doing a land office business selling real estate and lift tickets
the
to all of
foreigners.
those
To the foreigners.
Yes, they are.
Yes, that's a
precisely the
disaster.
point,
Where they're
Liz.
buying our country out from under us because we're bankrupting ourselves.
Like Norman.
That's precisely the
Selling
point.
tickets,
dude.
You got the 25 cents. The flip side of that whole weak dollar story is this influx of enormous amounts of money coming in here.
Building plants,
and
Michael.
Building plants, investment.
They're renting homes in the Hamptons for $1 million.
Go ahead, Mike.
It's play money.
Hold on, please.
Mike, go ahead.
So you have, that's the flip side of the story. Look, fluctuating exchange rates act like a stabilizing mechanism. In New York City here last year, $47 billion, a record amount of tourism coming in here. Exports, by the way, the fourth quarter GDP does not include December export numbers, which we won't know until February. It could be very easily a situation where we
Let's
get a
not
higher
get too
number.
wonky here on the bottom line is what Peter Schiff sees is the Weimar Republic, Germany, you know,
What is
where you bring in
wrong?
these wheelbarrows full of money, that this 25
on.
cents is actually going to go down to a penny. Do you really think it's that bad?
You're on?
You're on?
No, I don't think it's that bad, but I think it's bad. It doesn't have to get that bad to be awful. Let me use that emergency room metaphor. The patient's there lying on the kuni, he's dying, and we're injecting him with water and a little bit of poison. When we have to remember that it's a doctor that caused the disease to begin with. It's loose monetary policy that caused this problem. It's overregulation of financial markets that caused this problem. Mike, quiet for a minute. Quiet. It's the doctor who caused the problem, and we're inflicting more of the same poison on this economy. Short term, everything might look great in a few days, but long term,
may I add to one thing
very
quickly? Don't forget, this is a classic. You've got a 9-inning ball game. The first 3 innings, our enemies bash the United States. The second 3 innings, our friends bash us, and the third 3 innings, classic, we bash ourselves. And that's where we are now. New York Times Sunday Magazine shows the United States shrunken down to a tiny shadow of its former self.
Yeah,
no way.
That's a great contrarian indicator, by the way.
I think you all need a ski vacation.
Yeah, you're lucky you
we
got
can't
lodging.
afford one.
Alex,
the
at least you
Europeans
got
are on the slopes. There's no room.
You know, I mean, Alex makes a great point as we come up on the closing bell that you can't find lodging in Vail because wealthy Mexicans, wealthy South Americans, and Europeans are coming here. I'm not sure that's the worst thing in the world.
It's not. It's the way it's supposed to happen.
But we are at the end of a game, at least one day's game, and it all adds up to negative figures today. The closing bell on Wall Street.